In the post-war period, the UK economy grew at an average of 2.5% a year. But since 2010, the UK economy has performed very badly, barely stuttering along at all. The OECD report that since 2010, the UK has seen growth in average wages of just 0.1%, significantly lower than the majority of our main competitors. If current trends of growth are maintained, Polish living standards could exceed the UK by the late 2030s. The poor economic growth record of the UK was a motivation for Liz Truss's shock therapy approach last September 2022. The problem was that large unfunded tax cuts for high earners sent markets into a spin, pushed up interest rates and damaged confidence. It seems there's no easy solution to economic stagnation. But if the outlook for the economy has deteriorated, how much of this is due to external factors and how much is due to mismanagement by the government? And importantly, can we turn it around? The biggest problem of the past 2 years has been inflation. It has caused falling real wages, uncertainty, and impacted the poorest the most. Recently, Rishi Sunak claimed credit for halving the inflation rate from 10% to 5%. And it is true that inflation has fallen, but it's also true that it has very little to do with government policy. Just as the initial spike in inflation came from a surge in gas and oil prices, and then in 2022 the Bank of England hoped this rise in inflation would prove temporary, but their forecasts were repeatedly wrong. Inflation grew much faster, and this is why we've seen interest rates increase so quickly. And the recent fall in inflation this year is primarily due to the recent declines in energy prices. With inflation, it seems that the government is at the mercy of external factors. But this is not entirely true. Some European countries, such as Spain and France, had lower inflation than the UK. The main reason was that in France and Spain, the government was much more willing to intervene in capping energy prices. This is expensive, but by preventing large energy price rises, it reduces inflation elsewhere in the economy, reducing costs for workers and business and ultimately the government. But if inflation was mainly due to external factors and the Bank of England, what about the slowdown in economic growth since 2010? Back in 2010, the Conservatives inherited an economy recovering from a global financial crisis and a record peacetime budget deficit. A central plan of the Cameron and Osborne era was the necessity of fiscal austerity. They argued borrowing needed to be reduced quickly. But the panic to reduce debt was not shared by most economists. In 2010, UK debt to GDP was still low by post-war standards. And despite rising demand for healthcare and an ageing population, spending cuts were pushed through. But austerity had two major costs. Firstly, in the short term, austerity reduced demand and slowed down the weak economic recovery. Despite spare capacity, quantitative easing and a 30% devaluation in sterling, economic growth remained unusually weak throughout the 2010s. Interest rates fell close to zero, but despite being very cheap to borrow, the government chose not to invest. It was a missed opportunity to improve the UK's crumbling infrastructure or improve domestic energy capacity. There's a strong link between levels of austerity and slower rates of economic growth. It's bad economics to obsess about deficits when growth is so weak and interest rates were so low. And one of the tragedies of the austerity era is that despite cuts to public spending, government debt rose anyway. Debt rose from 55% of GDP in 2010 to 100% in 2023. Now, some of that was necessary, even desirable for dealing with the COVID crisis. But the problem with austerity is that by contributing to lower economic growth, it leads to relatively lower tax revenue. In fact, to deal with lower than expected tax revenue, the government has been forced to increase tax rates as a share of GDP to record peacetime levels. And higher taxes have only further squeezed living standards and held back business investment. The austerity of the early 2010s have also hit public spending and infrastructure. There are over 7 million on NHS waiting lists, which continues to grow. Schools are in need of repair, and there's a growing backlog of court cases with many local authorities also on the brink of bankruptcy. Now, these may not always affect economic growth immediately, but the cumulative effect is to hamper nationwide productivity and confidence in the economy. And this is one of the biggest concerns of the past 13 years, the sharp slowdown in UK productivity growth. This is the main factor that determines future economic growth, and the outlook is currently bleak. The government did back the ambitious and expensive HS2 train scheme. Even amidst austerity, Cameron and Osborne were enthusiastic backers for a scheme which in theory would revitalise UK infrastructure and help bridge the north-south divide. But the recent partial cancellation of the scheme is symbolic of the difficulty in building things in the UK. It was felled by a combination of rising costs, mismanagement and government meddling with a scheme to add more expensive tunnels to appease local MPs who never wanted the train line in the first place. Costs soared from 40 billion to an estimated 130 billion. And in 2021, a government report still stated the scheme was a net benefit to the economy, as long as it was built to Manchester and Leeds. But the recent cancellation of the northern legs means we are left with a 50 billion white elephant from a suburb of Birmingham to a suburb of London. It is the one leg of HS2 with the long-term benefits and never likely to exceed the costs. And the failure to build HS2 in the north only highlights the UK's big regional inequality problem. Another big failure of investment is in the housing market. Rising house prices and rising rents have been critical for damaging living standards, especially for the younger generation. Now, faced with rising house prices, one policy the government implemented was Help to Buy, basically enabling first-time buyers to borrow more. But this did not tackle the underlying situation, which is a lack of supply. It only aggravated the rising prices by stimulating demand artificially. And despite promises to build 300,000 homes a year, the government has failed to meet its own housing targets. And it's worth adding a failure to meet housing targets has been a notable feature of UK government, whichever party is in power. The housing crisis has become particularly acute in the private rented sector, because the UK has had a net loss of 1.5 million social housing since the early 1980s. This has caused demand for private renting to soar. Selling off council houses was popular to those who could buy at a discount, but the proceeds were never reinvested in building new social housing. It means that many low-income households have been pushed into the private rented sector, which is struggling to keep up with the rising demand. And it hasn't helped that many buy-to-let investors have recently sold up, fed up with higher interest rates and more government regulation. And housing is one area of the economy where the government could definitely have done more to reduce the excessive cost of living pressures that especially young people face. Another shock for the UK economy was the Brexit vote in 2016. It had four main economic effects: increased costs on trade with Europe, a devaluation in sterling which raised import and food prices, a negative impact on investment, and lower economic growth than otherwise. An NIESR model suggests that Brexit has caused GDP to be 2.5% lower than otherwise, and this will rise to a 5% loss by 2035. And this is similar to studies by the OBR and the UK in a changing Europe. Now, it's important to stress that Brexit does not mean the UK will be in a perpetual recession. It's more like a slowly deflating balloon. It's something you don't particularly notice at the time. Since 2016, UK growth has actually been quite similar to the Eurozone, but much less than the US. And also, some of the predicted negative effects of Brexit have not materialised because EU migrants have been replaced by non-EU migrants. But although it's not completely calamitous, by 2035 the cumulative effect will be that UK net GDP per capita will be around £2,500 less than if it had stayed in the European Union. Now, a Brexit that involved staying in a single market or even just a customs union would have had much less economic costs. So here a deliberate government policy has had quite a big effect on the economy. And Brexit also had a clear impact on investment, with uncertainty reducing business investment growth quite markedly. And the UK has one of the worst levels of investment in the OECD. and it's not going to be helped by recent rises in interest rates, which only reduce investment further. And also UK very poor research and development by international standards. And tackling this will be very important to changing the long-term performance of the economy. So overall, with the exception of low unemployment, UK economic performance over the past 13 years has been very poor. Now, to some extent, the government have faced difficult external shocks, a slowdown in global productivity, COVID crisis, Ukraine war pushing up energy prices. But although they've been dealt a difficult hand, there have also been a few self-inflicted wounds. The long drama of Brexit definitely undermined investment and frustrated business, who face higher costs. The austerity of the 2010s was driven by ideology rather than sound economics. It's left a legacy of slower economic growth and underinvestment in the infrastructure the UK economy needs. And despite one party being in power, there's been a surprising amount of flip-flopping on policy, from the austerity of the Cameron era to the radical stimulus of Truss and Kwarteng. Tax rates have fluctuated, there's been a lot of policy change, and there's been a lack of coherence and stability in many government departments. Now, it's very easy to make a post on the UK's decline, but it's harder to offer constructive policies to actually change it and improve long-term performance. This video goes into more detail about whether the next government could turn around the UK's performance and lead to better living standards for everybody. It will be a slow process, but it is possible. If you like this video, please subscribe and give it a thumbs up. Thanks a lot. Bye.